Be Wealthy and Smart, episode 1473.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about consumer confidence and extreme fear, which tells me that the emotional side of investing is coming into play here. We had a weaker than expected consumer confidence reading from the Conference Board, which included disappointing retail sales numbers and a weak consumer sentiment reading, which is worrying traders. However, those traders are pricing in 2 interest rate cuts by the Federal Reserve of 0.25% this year, with about 70% certainty. The main economic data release we're looking for this week is Friday's report, the PCE report, which is Personal Consumption Expenditures Price Index, and that's the number that the Federal Reserve prefers to look at for their inflation gauge, and we'll see how close we are to the Fed's 2% target rate. Stocks have been reacting sharply to this and lower earnings reported by some companies, which gave investors a 4-day losing streak. As we look at performance year to date, we see that the NASDAQ has moved into negative territory, down 0.5% year to date. The S&P 500 is up 2.13% year to date, and the Dow Jones Industrial Average is up 3% year to date. Concern about a dropping stock market and crypto market has created an extreme fear sentiment when measuring investor opinions, and that can often indicate that we've seen the worst or we're at the bottom and we're about to turn around and head back up. One thing that may provide some upward movement today is that NVIDIA is reporting its earnings. And should NVIDIA have good earnings, that could buoy all of the AI stocks which have been floundering lately. Now, since the consumer makes up 70% of the economy, consumer confidence is extremely important. And it had its biggest monthly decline in more than 4 years. It dropped from 105.3 in January to 98.3 this month, which was also the largest month-to-month decline since August of 2021. The Conference Board said views of current labor market conditions weakened. Consumers became pessimistic about future business conditions and less optimistic about future income. Pessimism about future employment prospects worsened and reached a 10-month high. U.S. Treasury Secretary Scott Bessent said Tuesday that the U.S. economy is more fragile under the surface than economic indicators suggest, and he vowed to reprivatize growth by cutting government spending and regulation. Bessent said that 95% of all job growth in the past 12 months has been concentrated in public and government-adjacent sectors, such as healthcare and education, jobs offering slower wage growth and less productivity than private sector jobs. He said jobs in manufacturing, metals, mining, and information technology all contracted or flatlined over the same period. He said the private sector has been in recession. Our goal is to reprivatize the economy. Consumers have appeared increasingly confident heading toward the end of 2024 and spent generously during the holiday season, but U.S. retail sales dropped sharply in January, with unusually cold weather throughout much of the U.S. taking some of the blame. Retail sales were down 0.9% last month from December, according to the Commerce Department. The decline was the biggest in a year and came 2 months after robust gains. According to Pantheon macroeconomics chief San Toombs, consumer confidence has deteriorated sharply in the face of threats to impose large tariffs and to slash federal spending and employment. We've also had stubbornly high interest rates, which has affected the housing market. Although mortgage rates dropped to the lowest since mid-December, they're still at 6.88% for a 30-year mortgage, down from 6.93% the month before. And although interest rates are the lowest they've been in 2 months, they're still considered high for where we've been. And that's been affecting mortgage applications, which have been relatively low. Joel Kahn, MBA's vice president and deputy chief economist, said Treasury yields moved lower on softer consumer spending data as consumers are feeling somewhat less upbeat about the economy and job market. This pushed mortgage rates lower, with the 30-year fixed rate decreasing to 6.88%, the lowest rate since mid-December. Applications for refinancing fell 4% for the week, but were 45% higher than the same week a year ago. Matthew Graham, Chief Operating Officer at Mortgage Daily News, said when demand rises, rates fall. When bond demand rises, rates fall. The broadest and most common explanation have to do with expectations for a downshift in global economic growth in response to domestic tariffs and cost-cutting efforts. Yeah, I think there's a lot of confusion about many things that are happening in the background, and people are looking for the State of the Union speech on May 4th as something that may provide clarification for some of these background operations. But overall, the economy is generally healthy. Interest rates are higher than they have been, but not exceedingly high. Inflation is a little bit high, but not exceedingly high, and is trending lower in the right direction. Most corporate earnings have been positive, although we have had some weak spots. And the surprise appearance of DeepSeek from China shocked all of the AI stocks. So I think this is just a good buying opportunity, a place where you can pick up your crypto at a lower price, your stocks at a lower price, because from what I'm seeing, especially starting later this spring and into the second half of the year, things are going to be booming again. And that will probably be from interest rates declining, which it looks like everything is lining up for interest rates to come down even more sharply than what is currently being forecast. So this is a good time to take advantage and buy the dip. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And if you're looking to improve your investing game, check out the Be Wealthy and Smart VIP experience. You join once and have lifetime access and are provided a portfolio of stock ETFs for your 401k or your IRA, private equity if you're an accredited investor, and our portfolio of cryptocurrencies, which have been having stunning performance and handily outperformed the stock market. If that's something that interests you, check out our special offer in the show notes below. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.